Can you hear me fine?
Yes.
Yes.
So yeah, let's get started. Thanks for joining, everybody. You should all be muted at the moment. Please remain muted unless you are speaking. Yesterday we launched lending on Fuse Network, an awesome new development for the ecosystem. Liquidity is growing slowly but surely, just getting started. Of course, this was done in partnership with Ola Finance. So first of all, I wanted to give David from Ola Finance the opportunity to introduce himself. After that, we'll talk a little bit more about why we did lending on Fuse. Mark will intervene at that point, talking about the ecosystem, DeFi, why lending on Fuse. And then we'll have a product demo. So if David, would you like to say a little bit about yourself?
Yes, sure. So I'm David. I'm Israeli, and so I guess my background is mostly academic slash technical. I stopped my PhD in the Technion, which is the Israel Institute of Technology, in order to kind of, as I saw that Ola Finance is gaining more and more traction and that something is happening, I decided that I can't do both things at the same time, so I have to kind of make a choice. I hope that I will get back to my PhD soon, but as of now, I'm working on Ola full time. Ola basically, I'll say a few words about Ola, or not yet.
You're on mute, Robert.
Sorry, just a general overview of what Ola's about, if you would.
Yeah. So Ola Finance, the idea is that so we were pretty heavy DeFi traders and participants, liquidity providers, etc. And it was very difficult for us to basically get hold of kind of more exotic assets. Basically, you can only buy them, and that means that you lose your exposure to the asset that you were holding before, if it's ETH or USD or whatever your base assets, that you want to hold as a base asset. So the way to mitigate this is basically to borrow the other tokens that you want to get, and as of now, if you look at the lending the lending networks that are available on Ethereum, on Binance Smart Chain, they don't offer a very big variety of tokens. So Ola Finance is basically, it's about facilitating the creating lending networks, that basically the owner of the lending network can launch the lending network in a very quickly, in a few clicks of a button. And Ola Finance takes care of everything that's in the background. So oracles and additional security measures, liquidator bots. We welcome additional players, but we by having us as a player that does it for you, it really facilitates the the way to launch a new lending network. And another important feature is that we don't list all the tokens into one big lending network, but rather we split the lending networks, and so the risk is also doesn't flow from one lending network to another. So if you don't participate in a specific lending network, you're not exposed to risk that comes from that network. So I guess that's a very, very high level overview, and then I guess we'll, as in the demo, and we'll kind of deep dive into other.
Awesome. By the way, quick message to participants: if you wanna, we're gonna obviously do a product demo and then questions at the end. You can start writing questions now if you like in the chat, and they'll be answered later on. Mark, if you'd like to say a few words about why we decided to do this partnership and bring lending to Fuse Network?
Yeah, so I have a little bit of like zoom out statement and a zoom in statement, like a macro and a micro statement. So on the micro, Fuse and Ola are complementing networks. So basically building, we're building a platform for launching communities, community currencies, loyalty systems, stable coins. Basically, we focus on the long tail of communities, whether it's sports clubs, online or offline marketplaces, secondhand, like pretty much any startup that has users needs to access this infrastructure, needs to be able to get paid, needs to be able to incentivize users, needs to be able to whether it's rewards or accessing basic financial products. If they want to access their customers, they usually need a lot of doing a lot of heavy lifting, and Fuse is just giving like an ecosystem of tools. Lending is really one of the main things that power our economy. So most of the money in our financial system is credit, and this is like the zoom out statement. So DeFi showed a way to get a loan without any bank in the middle, without a procurement process, credit scoring, without fractional reserve, without asking the banker, without waiting a week, without signing any documents, without any friction, basically. You're taking a loan against the contract. And everybody said, aha, that's super interesting. And for DeFi application, it's transformational. But I would argue that this is transformational beyond DeFi applications. And I would argue that in a few years from now, people will not say DeFi as the same way they're not going to say e-commerce. So in the future, probably commerce and e-commerce will be exactly the same thing. If you go to China, 80% of their sales are online. In America, it's much, much less. But we know in the Corona, it's just jumped very high. And moving forward, probably in a few years, like in the near future, we're going to have like majority of our sales being done online. Majority of commerce will be done online. So I believe in a few years, it wouldn't be probably in the near future, but it will take a few more years. Anybody in the world can just access those tools and get a loan straight from his phone. And this is just a matter of time until we reach that point. So just to give a little bit of numbers, there's approximately estimated something like 150 million crypto holders, people that hold Bitcoin or Ethereum or basically in the just like amount of addresses. And it's unclear how much actual people hold crypto, but at some estimations there's 150 million addresses. Out of that, inside DeFi, we have about 2.5 million. And that's actually pretty easy to track. This number is hard to manipulate because Ethereum is account-based and it's very expensive. So actually there's the traction that DeFi has could be tracked very accurately, and it's tiny. It's tiny because it's super complicated. It's very complicated to understand the protocols. It's very risky. Even within the crypto community, there's a very small minority that is actually able to access DeFi in a meaningful way to actually interact directly with those protocols. So it's clear that nobody's going to really interact, like consumers are not going to interact with Compound anytime soon. We're talking about layers and layers of abstraction that you need to build on top of those protocols to make them usable. And this is why I think Ola Finance and Fuse are really good companions. We have one foot in the consumer world, really building the non-custodial infrastructure that will allow us to access the next 100 million users. We want to go beyond the existing 2.5 million DeFi users. We want to go to mainstream audience. We want to say to people that don't have access to dollars, don't have access to euros, They may live in places where there's no financial system, or even in the West, in advanced countries, you still have places that want to launch something, want to access financial services and can't. So Fuse is building an infrastructure that allows everybody to build and access those tools. And Ola Finance is building the protocol through which people can take a loan. And the vision of us working together is that people can, you know, in a few years from now, somebody from Africa can just say, okay, I want to take a loan of dollars. I want to lock my crypto and get a loan against that, basically get a loan against my crypto. But this crypto is not necessarily has to be Bitcoin. It could be anything. It could be maybe a loyalty currency that was issued by a local marketplace, and they're really supporting that marketplace. They don't want to sell the coin, but they want to borrow against it. And it just gives like another huge world of possibilities, which you can't really imagine being built on Compound. This is why we need the Ola. We can't really have one protocol with one single currency or a few single currencies, basically controlling all of this lending activity, which is going to be, by my estimations, just very, very important moving forward.
Fantastic. Thanks for sharing that, Mark. We're going to pass it back over to David now, who I think is going to share his screen and show us how the application works. So show us how to supply assets, collateralize them in order to then borrow, and maybe some of the strategies that can be put in place by liquidity providers and people using the network in general. Over to you. I think you're muted though, David.
Okay, can you hear me now?
Yes, we can.
Okay, perfect. All right, so first of all, let me just show you. So when you enter the Ola Finance app, this is the page that you land upon. And this page in the future is going to show basically all the different lending networks. Currently, we have only one network, but in the future, we'll have maybe networks on Ethereum, on Binance Smart Chain, on Polygon, on maybe on a second layer on Ethereum. So we hope to be everywhere. We started with Fuse. So this is an overview of the lending network. You see there's WBTC, with USDC and Fuse, and the TVA currently is $27,000. Okay, so we enter, and if we are connected with our Metamask wallet, as I am currently, then we can see this is basically what we see on the top side here. We're going to see our position, the overall position that we have in the protocol, which is currently nothing for me. And then down below here, there are two sides. There is the supply side. So this is if you want to supply tokens and collateralize them. This is done on this side. And then once you did that and you want to borrow, then you go over to this side and you borrow whatever you want. Once you have borrowed assets, they will appear in your wallet, and you can do whatever you want with them. You can transfer them, you can deposit them in an exchange, you can provide liquidity, you can do whatever you want with tokens that you borrow. Now, before I go into the demo, let me just show you this page, the network page. This page is really cool. It shows you this basically high-level statistics of the network. And we're going to add things to it as time goes. So for example, this bar here shows the percentage of each token that's being selected. So this is WETH. Okay, so we see that WETH is currently, there is $16,000 worth of Ether supplied into the system, into the platform. we see that there is $581 of worth being borrowed. The collateral factor is 70%, the liquidation factor is 75%. This is the current prices the system have for WETH. And over here on the top, it's the overall supply of the network, the overall borrowed assets, and the utilization. The utilization is basically the ratio between the supplied and between the borrowed and supplied assets. Okay, so once we understood what we're seeing, let's perform. Let's take a loan, basically. So what I'm going to do is I'm going to provide a fuse and take a loan in, say, USDC. So first thing, I have to provide liquidity. So when this pop-up comes, there is a supply side and the withdraw side. Since I haven't supplied anything, I can't withdraw anything. So let's supply. I will supply, say, I don't know, 70 fuse. And since it's a small amount, oh no. So, okay, and now important to understand what we're seeing here. So you see the borrow limit that I'm going to have after I supply the fuse is going to be $0. And I will explain in a second why is that. I just wanted to kind of to show you this before I supply. And then I supply. So I supply, okay, Metamask, confirm. Great. I supplied, but I haven't. Okay, so now it's updated. You see, I have 70 fuse supplied, and this is my supply balance, $8. Now, but I can't take a loan as of yet because I haven't collateralized the tokens that I supplied. I see a question in the chat. I'll answer it in a second.
Okay. Yeah, we can save it for later, yeah.
Okay. So I supplied 70 fuse, but I haven't collateralized it yet, so I can't take a loan. So in order to collateralize it, basically all I have to do is hit this toggle, and this explains to me that I'm collateralizing. I accept, confirm. Great. So now it's open, and I want to show you again. This window here, it tells me what is my current borrow limit. So it takes into account the collateral factor and everything, and it says you can borrow up to $1.69 with the amount of collateral that you have. Okay, so let's do that. Let's borrow $1. So if I press max safe, it will do 75% of what I can actually borrow. And let's borrow that amount. So you see, it takes my borrow limit used. It will take from 0 what I have now. And after I process this transaction, I will have used 75% of my borrow potential or my borrow limit, and I will borrow $1.27. So I'm going to borrow, confirm. Great. So now what you can see is that I have a borrow balance of $1.27. You can also see that here in the borrowed section here. So basically, the top number is what I have in my wallet, and the low number is what I have borrowed. Okay. So I want to note something important. If I want to repay this loan, I won't be able to fully repay this loan because every block that advances in the Fuse blockchain, basically I accrue interest. I have to pay interest on that loan. And since I had 0 balance in USDC before I took the loan, I won't have the funds to pay the loan that I took. Okay, so this is a difficulty I get sometimes question about, why I can't repay my loan. You can't fully repay your loan because you need to have basically funds in your wallet to cover the interest that accrued. Sorry, during the time that the loan was open. Okay, so I'll just show you anyway that I can repay at least some of my loan. But in order to repay the loan, I first have to approve the protocol to spend my USDC. Okay, now these USDC that are sitting in my wallet, protocol doesn't have access to them. So first of all, I'm approving. Okay, and then once I have given the protocol the permission to move my USDC around, I can repay some of the loan. So I can't do all, but I can do, say, $1. Can repay $1. And then I repay my $1. Confirm. Great. And now my borrow balance is smaller. You can see it also here. My funds, the funds in my wallet are smaller. Yeah, and basically this is how it works. You can supply collateral in multiple assets. You can take borrow in multiple assets, as long as you respect the collateral factor limit. Basically, right now I'm using 15% of my borrow limit, which is $1.70.
I've got a quick question here. What happens, because this is something that I was, this is something that I had a question I had the other day when I was testing it. What happens if you click collateral? So you collateralize, but you don't actually supply, you don't actually lend to the network.
Great. So if you enable an asset as collateral, but you haven't supplied it into the protocol, then basically you have collateralized zero value. And against zero value, you can borrow zero amount of assets. So you have to do both. You have to supply assets to the protocol, and then you have to collateralize those assets. And only then you can take a loan.
Fantastic. I think we'll.
What about like the opposite question? What if you supply and don't collateralize?
Yeah, great. So I think the majority of users, basically what they do, they provide liquidity for borrowers. So they don't want to take a loan, they just want to provide liquidity. And that's great. You provide liquidity. And what you do once you provide liquidity is basically you gain interest. That the interest is the APY that you see on this column here. This is basically what you're going to gain in a year, right? In a year, if nothing changes in this lending network, then this is the amount that you're going to gain.
Yeah.
Now this interest rate, it gets calculated basically according, or it gets decided and determined by the protocol, and it gets determined by the utilization ratio, which is basically the ratio between how much of the liquidity being supplied is actually borrowed. Okay, so as long the more borrowers want to borrow fees, the higher the interest is going to be, both for the borrowers, which are basically paying this APY here, and the liquidity providers that earn it on this side.
Mm-hmm. Awesome. I'll take a question here that we got live. Just concerning, I suppose it's maybe a UI question or a user experience question maybe, which is what happens if you've supplied and then of course I imagine collateralized and then borrowed, is it possible to take out the supply given that you borrowed? And if that happened, would it liquidate your position?
Great. So the UI protects you. It won't let you get into a position that can be liquidated, but it does let you get into a position that is like at 100% collateral factor. So basically, if you accrue a little bit of interest on your borrow, on your loan, then it might get into a liquidatable position. Your position might be eligible for liquidation. So this in this regard, you have to be careful. I want to show you on this page here. We do have in most markets, we have some difference between the collateral factor and the liquidation factor. So the collateral factor is what the system allows you to take the highest or the highest amount of a loan that you can take is 70%, right? But liquidation comes at 75%. That's in the case of BTC, meaning you have some buffer. But for example, in USDC, if you provide the USDC as collateral and then take a loan against it, then basically the UI is going to let you take up to 75%. It won't let you take more than that. So you're not, because this transaction is not going to pass anyway. So the UI knows it and it won't let you send the transaction. But you are going to be able to take a loan with 75% collateral factor. And then basically if you accrue a little bit of interest or if the price changes very slightly, then all of a sudden you can be liquidated, and you probably would be.
Awesome. We'll continue with the slightly technical questions and then get to some more overarching or overall questions in a second. But a question from Andy here: how are the collateral and liquidation factors calculated? Are they dynamic or hard coded?
Yep. So they're hard coded in the contracts. They can be changed, but in a restricted way. So the collateral factor, it always have to be smaller than the liquidation factor, obviously. And the owner of the network can basically increase or reduce it. The liquidation factor cannot be reduced, because then the owner of the network can basically force positions into a liquidatable state. So, but the liquidation factor can be increased, and there's a limit. There's like a hard-coded limit that's mutable that can never be changed of 90% for every asset. Yeah, I hope this answers the question.
Okay. I'll go to some questions that we got before the AMA started, and it kind of goes back to what we were discussing earlier, just to sort of reiterate and to be clear on how this differentiates from what we see in the industry, things like Aave and Compound. I know that you touched on this earlier, but could you sort of talk on that briefly again, how it's different?
Yeah. So let's start with the most basic difference between Ola and a system like Compound or like Aave. So Compound and Aave, basically, they run one major main lending network, and different projects and tokens work very hard in order to be listed into those lending networks. And usually they don't succeed because it requires a very difficult and lengthy governance process. And also, they don't want to list new tokens because it really increases the risk of each and every user of their platform. So even if you are a Compound user and you provide ETH and take USDC as a loan, if I add a token that is not you're not touching it, you're not interacting with it, you don't care about it, you're still exposed to risk because they listed a token that's that creates risk to the whole network. So they are very reluctant to add tokens, and they're very cautious, and they do it very slowly. And this is a problem for the ecosystem. This is the problem for all these tokens that basically want to thrive and to create, financial environment that is healthy and robust. They can't, because they don't. The most basic financial aspect of lending and borrowing this asset is not available to them. And so what Ola does is it comes from a different approach. It says, instead of just doing one major lending network and having all these assets listed on it, what we're going to do is we're going to let anyone create their own lending network, and they can decide which tokens they want in their lending network. They tune the parameters as they see fit, and then Ola takes care of all the things that are required for this thing to operate in a normal and healthy way, which are price oracles, liquidator bots, a normal UI that gives you access to these lending networks, etc. And then basically what we say is that the users are going to decide which lending networks make sense, which ones are too risky, which ones are not too risky to use, each user with their own risk profile. And this is very similar to Uniswap's approach, right? Uniswap says anyone can create a pair. You put any tokens that you want in this pair, and we are going to give access from our UI to all the pairs. And basically, the users are going to decide which pairs get a lot of liquidity, a lot of volume of trading, and which ones don't. So this is very similar, kind of in the very kind of high level philosophy of what we're trying to do. So sometimes we call ourselves like kind of like the Uniswap of decentralized lending.
Awesome.
Yeah.
There's another question here which might help us get a bit more clarity on that, though, because from my understanding, it's not just any token, right? They can come into the lending network. I suppose the broader question, and maybe for Mark, would be, what does this mean for communities that are building on top of Fuse? Would their tokens potentially be able to be integrated into this or another lending network on Fuse in the future?
So I think the first thing we need to do is to add support for Ola lending network on our wallet. So I want to find a way to cut this friction. So right now, the people that can use those lending networks are the liquidity providers, and they need to be kind of a little bit more knowledgeable. So, and it's a bit more. There's a bit more. It's just like providing liquidity on Uniswap is still kind of difficult. Using Metamask is still kind of difficult. That means that using Ola Finance is really more for people that know how to use those tools. They know about this ecosystem. They know about LP tokens, and they know about Metamask, and you kind of need to know a lot of things to use it. So we want to cut this friction and make those products available to consumers. It needs to be straightforward, so we need to find a way to create a banking product that has no bank, but it still feels like a banking product that you use on an everyday basis. And I think even traditional banks, they're only learning now how to offer banking products on mobile. So our competition is not that fierce in the mobile space. Nobody actually gets loans, applies for a loan and get a loan instantly in a second on their mobile phones. That would be a new thing. So this is why I'm excited about adding this to our consumer product, Fuse Cash. And of course, it opens a world of opportunities, like only the yield and how to collateral and use this collateral and use the incentives. And there's a lot of different aspects, but I'm most excited about just making it accessible to consumers. And the next thing that I'm excited about is to add this as a plugin in our studio. So people are going and creating a coin. They have a plugin to connect their coin to liquidity on FuseSwap. So that's a plugin. You can actually go to the studio and create liquidity for your currency, basically make it tradable, accessible, and create a price discovery. So that's like a huge thing that we added recently, and create a lending network for your token, or adding your token as a collateral with no voting, with no loan governance, with no need necessarily for like liquidity requirements. And of course, it will start small, but the opportunity is not small at all. Like if you can actually bring users and bring the currency and give them a way to interact with this currency, not only by buying it on an exchange, that's huge. So that's something that we would want to explore moving forward.
Awesome. What tokens? We've obviously got Wrap BTC, Ether, USDC, and Fuse right now. For this particular instance, are there any other assets planned?
So I think we need to look into it. Right now, we didn't want to spread ourselves too thin. We didn't even add a lot of liquidity. Like our initial liquidity is very low. I don't think there's a point of adding more coins that have no liquidity. I think in the longer term, yeah. The near term, my guess is no. What do you think, David?
Yeah, I think that what you're saying makes a lot of sense. I mean, but really, if the only token I can think of currently is maybe the FUSD, because I'm seeing that it's getting a lot of activity on Fuse. So maybe it makes sense to add it, and then yeah, but yeah, in the future, of course. We'll see. I mean, yeah.
So I'll ask a question on that, because Mark was mentioning the consumer product before, talking about Fuse Cash. What David is referring to there is, of course, Fuse Dollar, which is the native stable coin on Fuse network. Mark, are you suggesting that people who have Fuse Dollar in this case are going to be able to, through the app, get direct access to the APY, to this lending market essentially through Fuse Cash, and to be able to get directly on it?
Yeah, I think right now the network needs to run for a few months as a first stage. The next stage would be to actually build new interfaces on top of this protocol. This is sort of a good interface for people that want to participate in both sides. We want to create something super simplified and super straightforward with a clear call to action. You hold Fuse tokens, get a loan of Fuse dollars. You have Fuse dollars, get an APY by simply holding them, simply depositing them. This is something that we need to grow, but that's pretty clear that there's a lot of room to improve the user experience. And also, you know, there's 1 billion people in 2020 worldwide that use their phones to pay. That was like a survey I just recently saw. 1 billion people use their phones to pay for the first time in some places. We want to give them a way to not only pay, but also to get a loan, get credit. And that's also something new. It's like probably the most interesting thing that I can see in this collaboration.
Fantastic. Just a question, David, going back to the app, is there a way for me to check how much, if I've supplied, if I've lent to the network, is there a way for me to check how much interest I've accrued so far?
Well, the easiest way would be if you remember how much you supplied, then basically, if you say if you press on this and you want to withdraw, then you would be able to see how much you're withdrawing, and then you would basically you could know how much you gained.
Okay, fantastic. I'll take another question here from Rob. Thinking of people without capital for supply, whether it would ever be possible to offer them a loan through some sort of other other qualification method, essentially, whether it be KYC, credit scoring, or something else, just other ways of getting loans without needing to over collateralize using assets. Any of you can take that question.
I think I don't see this coming in the very near future. I mean, there are all sorts of things that you can think about, like maybe I vouch for another person, and I supply collateral for them, and I say, okay, I know this guy and I trust him and he's going to pay me back, so use my collateral in order to let him borrow. So this is one approach that you can do. I think that at the end of the day, even any type of credit works on. Even if we don't collateralize anything in the currently, like when we give you the loan, the bank, when it gives you a loan, they know how much you're earning, they know that you have a job, and they kind of, in a way, in a sense, right, in this metaphoric sense, maybe you can think about it as if they collateralize your future assets, right? Because if you're not going to pay, if you don't pay them, then they have the ability to basically to confiscate those assets that you're going to have to, that you're probably going to earn. But within the DeFi space and the where we don't have identities and we don't have enforcement of loan repay, then I don't see in the near future a product that lets you borrow in such an easy and seamless way without providing collateral.
Yeah.
I would add that people are building credit scores on in crypto. I guess I agree with David. It's a bit far away. People do collateral for lending with NFTs, so you can like collateralize NFTs to get a loan in Ether or something like that. You have like different ideas of like, there's a new coin that I saw, Liquidity, that does like 110% collateral instead of 150. So people tweak a little bit with the protocols, but there's no like credit scoring yet. I think that's actually one of the holy grails, because consumer credit everywhere is not collateralized. So if you want to tap into consumer credit, we'd need to think about other forms of collateral or credit scoring. I do think that this is like a first step, like fully collateralizing lending or over collateralizing lending. It's definitely more robust and more stable, and could work in a anonymous environment like crypto.
Awesome.
Yeah. Also, I want to add, Robert, 1 second, just a word. I think that what is really happening now in the space, and it's interesting, is that protocols start basically allowing the collateralization of very exotic and assets, and also assets that are not existing on the blockchain. So, for example, if you have a house, you can maybe in the future collateralize that.
Yeah.
Instead of to the bank, you collateralize it in a protocol like this, and then you can borrow liquid assets, against your very unliquid home that is yeah.
Awesome, thanks for that, David. we're coming towards the end of the AMA. There was one question which I'll answer very briefly. There's obviously an incentive for people to provide liquidity on the network just from the APY which is provided. There was a question as to whether we're going to be incentivizing otherwise. We will be. There's going to be a liquidity reward program. I'll publish details on it before the end of the week, so before tomorrow, end of day, so that people can see what the benefits of providing more liquidity would be.
Yeah, so I'll just say, Robert, I'll just say that one feature that we're not seeing currently, but that all our lending networks support, is the ability to airdrop tokens on users at a predetermined rate. So basically, we can drip wrapped fuse or fuse tokens, right, on the participants, the borrowers, the suppliers, and we can exclude or include any specific asset here that we want. And this could be a very big incentive, and I think that we're going to, as Robert said, we're going to launch a plan like that in the very soon future.
Yeah, there's two elements to it, right? So the stuff that we're talking about, and then there's stuff, you know, similar to what's been done previously in the space, whereby users might find that they're being airdrop tokens just from the activity they've done previously. So not everything will be announced upfront. So we encourage people, of course, to take part in the network and provide liquidity, borrow, and same thing goes generally with anything that's liquidity based on the and swapping based on the lending based, borrowing based on the platform. Has anyone got any other questions? I think we had a question here from Jan about an Ola token, if an Ola token exists at all and what it's used for.
Yeah, so currently we don't have a token yet. We are going to have a token in the future, and the token is going to be a governance token, and also it's going to be to entitle the owner of the token to a share of the fees that are generated in the platform. So it's very similar to, for example, to how Sushi works. Sushi is a governance token, right? Holders can vote and kind of determine how the protocol advances and evolves. But they can also stake it, and then in return they get paid, or they get extra sushis that are being bought with the fees that the exchange accumulates. So this is something that we are planning and working on, and we're going to launch it as soon as we get some traction. And yeah.
Nice. Have any of you got any closing comments before we finish up?
Yeah, I wanted to talk about how this could be used for the ordinary fuse holder, and how they can actually benefit from this and earn some APY. Like, what are the strategies that can be done, right, to maximize your returns by holding fuse? So I can just run through a quick example, and I hope this makes sense. So if I'm a fuse holder, what I would do is I would probably deposit fuse into the so say I have I don't know 100K USD of fuse, right? And I want to provide liquidity, say in fuse swap, and to get some rewards for doing so. But I only have fuse, right? So what I would do is I would deposit the fuse, some of the fuse. I would deposit, say, half of the fuse here in the lending network, and then take some wrapped Ether or USDC against it. And now I have both. I have wrapped Ether and I have fuse, and I can provide liquidity in fuse swap, and I earn interest. Basically, I earn fuse. I earn fuse there from the the airdrop that's going on fuse swap. Alternatively, if I have Ether and I want to maintain my exposure to Ether because I'm very long Ether, so I don't want to just go ahead and buy with half of my Ether. I don't want to go and buy Fuse. Then what I could do is I could deposit my Ether here, or some of it, like half of it, I would deposit here. I would take a loan in Fuse, and then again I can provide liquidity for the ETH Fuse pair. And so I think that one of the major benefits for Fuse in the very short term would be to really increase the liquidity for trading, and then reduce slippage. And I think that people that are long Fuse, and that this is a great way for them to do it.
Yeah, great way for them to do it without losing exposure to the assets they've got.
Exactly.
Yeah,
awesome. And
I think in the near future they also get a bonus in Fuse, like an airdrop in Fuse, just by using the platform. So that's another way to earn Fuse.
Yeah. Anything else, guys, before we finish up? Awesome. Anyone who's got any questions? Obviously, there's the Fuse Telegram group, which I think that most of you are in, Fuse.io. And then there's also the Ola group, so the Ola Telegram group. If you've got more technical questions or any questions you want to ask specifically to the team at Ola, I think the handle is Ola_finance. Thanks very much, guys.
Yes.
Thank you.
Thank you very much.
Cheers.
Bye, everybody.
Bye.
Bye-bye.